Hello, welcome back. Paul Gerard from Price Accounting Services. In this video, we're going to be talking about insurances, and it all relates to our playlist concerning rental property issues and deductions, etc. So, insurances. Broadly speaking, there are three types of insurances which some, but not all taxpayers will have on their investment property. And it depends whether you've got a strata property or a freestanding title. The reason for that is strata is slightly different because your building will be insured under the strata and you'll pay a levy which covers that. So your general strata levy incorporates that deduction for your building insurance portion of the cost. So otherwise we're talking about building, contents and landlord insurance as being the three major forms of insurance that taxpayers may seek to claim, and all three of those are shown on our checklist. And of course sometimes you've got building and contents, which is a combined cover, but it really just takes two policies together and brings them together. So let's go into some of the general issues surrounding those insurances, because it's really important you've got the right insurances and the right value. And I'm not seeking to give insurance or financial advice relating to insurance here, but I think as a property owner and as a tax advisor, I think it's only fitting we talk about these issues so that if you're not insured, you think about it. So what are we dealing with? Building. Your building insurance covers your complete loss of your structure in the event of fire or a catastrophic event. And it covers the reconstruction costs, etc. So building insurance is really important to everybody, and it's not cheap, but it is tax deductible, provided the use of the property for the full period of that policy was income producing purpose. Contents. Contents is one which I see many people without, and it's a red flag to me. When you own a rental property, as the owner, there are some contents which are owner contents, not tenant contents. And so it's really important that you have appropriate cover. It might even be under your landlord policy, but check it out, speak to your insurer, speak to your broker, just to make sure you're covered. Because in the event of a total loss, it might not cover, for example, your carpets or your tenant-owned fixtures and fittings, which are different. Sorry, not your tenant-owned, your own-owned fixtures and fittings compared to those owned by the tenant. And lastly, of course, then we've got our landlord insurance, which we strongly recommend EBM rent cover. EBM specialist policy, there's a few of these around, but one I like about EBM is they even have a specialised policy for short stay rentals. So the likes of Airbnb, for example, or stays, where generally you're uninsured. If you read the terms and conditions of your policy, it says that you must have a lease and tenancy agreement, and a tenancy agreement relates to state law. And so if you have an Airbnb accommodation agreement, that does not comply with state law, so therefore it's an uninsured event. So take care with that. And if you're not sure about your strata cover, have a look at your strata cover, etc. But generally speaking, if you've got a body corporate, you should be insured. Hope that addresses some issues related to insurance and the full deductibility where it's used for income producing purposes. If it's not, then the deduction isn't available. So check out our other videos in the series, check out our other playlists, subscribe, see you on Property Chat. And for those that are clients, look forward to speaking with you soon. Cheers.